Welcome back to Investing Talk Podcast.
Today we're looking at advanced micro devices.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. With advanced micro devices, the story right now is one of just massive financial acceleration. It's almost entirely driven by their big push into AI infrastructure.
That's a pretty compelling story, for sure. We saw that Q1 2025 revenue came in really strong at, what, $5.77 billion?
Yeah, and that 22% year-over-year growth.
Yeah.
It didn't just meet expectations. I mean, they really blew past them.
Okay, but what's even more telling than last quarter's numbers is the forward guidance, right?
Exactly. For Q2 2025, they're guiding to $5.95 billion, give or take about $150 million.
So if they hit that middle point, we're looking at, what is that, roughly 30% year-over-year growth?
30%. That isn't just momentum anymore. That's serious acceleration.
And you said the driver is AI infrastructure. So let's really focus on that data center segment.
That's the core engine. Data center revenue surged 27% year-over-year to $3.05 billion. It really feels like for the first time, they're successfully executing this plan to challenge the big incumbent in the most profitable part of computing.
And the proof isn't just the revenue number itself, it's the physical volume, right? How many of their flagship AI chips are actually getting into customers' hands?
That's the MI300X. And this is really the key takeaway. Management reported shipments of over 1.1 million units in Q1.
A million units in a single quarter.
In one quarter. And that volume is proof of scale. For years, the market questioned if they could ramp up production for the big cloud operators. Hitting 1.1 million units, that confirms they've solved the manufacturing puzzle. They could be a primary vendor in this AI race.
That's a huge operational win. But while all the attention is on the MI300X, their, let's say, more traditional businesses are also holding up well. It's not a one-trick pony story.
So, not at all. The client segment, that's the PCs, CPUs, and GPUs, that was up 31% year-over-year. Yeah, and a lot of that is tied to their new Ryzen AI 300 series chips, getting into those premium laptops. So they're capitalizing on this whole AI PC wave, too.
Okay, so when you have that kind of high-value mix AI chips in the data center, premium CPUs and laptops, that has to have a huge effect on profitability. What are the margins telling us?
They're telling us the story is working. The non-GAAP gross margin expanded to 55.8% in Q1. That's a 270 basis point jump from last year.
And for our listeners, 270 basis points is a 2.7 percentage point increase. In the chip world, that is a massive shift. Where's that coming from?
It's really two things. First, the pricing power of the MI300X. These chips command very high prices. Second, they're getting more efficient as they move to the TSMC 3-nanometer process node. Better yields, lower cost per chip, but the selling price stays high. It's the perfect recipe.
And that kind of growth needs financial flexibility. I mean, the AI race requires just constant heavy investment. So how's the balance sheet looking?
It's rock solid. They've got a net cash position of $2.77 billion. That's almost $7 billion in cash versus about $4 billion in debt.
So that's their war chest, basically.
It is. It lets them accelerate R&D or even make an acquisition without any strain.
And are they generating cash just as quickly?
Yep. Free cash flow for Q1 was $1.43 billion, up 44% year-over-year. And they're putting it to work. They bought back $750 million of their own shares in Q1 alone.
When a company is growing at 30% and buying back shares, that's a huge signal of confidence.
A massive signal.
Okay, so the financials check out. But in AI, money isn't everything. It's all about the competitive moat, the architecture, and more importantly, the software ecosystem. How are they building that out?
They're attacking on two fronts. First is the IP moat. They're using their Zen CPU cores with their CDNA GPU architectures, and it's all tied together by their own high-speed connection, the Infinity Fabric Interconnect.
Let's pause on that. Infinity Fabric, it sounds like jargon, but what's the real-world impact? Why does that create switching costs?
Think of it like a custom high-speed nervous system for the data center. It connects all the parts, CPUs, GPUs, memory, in a really optimized way. So a customer can't just, swap out the chip.
Okay.
They'd have to re-architect how their whole cluster communicates. That complexity, that is the switching cost.
That makes sense on the hardware side. But we both know the AI war is won in software.
Okay.
And that's historically been the challenge for them, right?
Absolutely. The dominant player software has been like an impenetrable fortress, but they are aggressively closing that gap with something called ROCM 6.0.
Right. I saw a metric that RCM now supports 95% of key AI models. That's a great number, but is it actually stable enough for, real production environments?
And that's the critical question. The answer, based on who's deploying it, is increasingly yes. It's not as mature, no, but that 95% figure means the biggest barrier to entry is basically gone. Developers can move their code over with way less friction now.
So let's talk real business wins then. Who is actually committed to this new ecosystem?
We're seeing huge deployments from the hyperscalers. Microsoft, Azure, OpenAI, Oracle. They've all signed multi-year contracts to embed the MI300X in their AI clusters.
And once that hardware is in the building, the switching costs become, what, astronomical?
They do. Some estimates suggest it could cost a cloud provider over $1 billion to rip and replace an integrated platform like that.
$1 billion?
Yeah. Between new hardware, retraining, re-architecting their models, once advanced micro devices in, they tend to stay in.
What about government adoption? That's usually a pretty big stamp of approval.
It's extremely bullish there. They won 5 of the 7 new U.S. government AI contracts in 2024. That means mission-critical, high-security operations are trusting the platform. It's a major validation.
Okay, but this industry moves so fast. The MI300X is just hitting its stride, but what's next? What's the roadmap look like?
The cycle is incredibly rapid. In April, they already unveiled the MI325X. That's their new 5th-gen AI accelerator.
And what's the big leap forward there? What makes it so much better?
2 main things. First, it has 2.5 terabytes per second of HBM4 memory bandwidth. That's just critical for these huge language models.
More bandwidth, faster training. Got it.
And second, it showed a 20% higher score on MLPerf, which is sort of the industry standard benchmark. A 20% jump there is a real, measurable performance leap.
And is anyone actually using this new chip yet?
Yep. Microsoft already announced it'll be in their Azure AI infrastructure starting in Q3 2025.
Wow, that's fast. That kind of immediate adoption from your biggest customer, that's a huge vote of confidence.
It is. It confirms the whole strategy is working.
So for a listener trying to time this, what are the immediate catalysts we should be watching?
The main one on the calendar is the Q2 earnings release July 30th. Everyone will be laser focused on the data center revenue guidance. The expectation is somewhere between $2.8 and $3 billion. Any surprise to the upside there will move the stock.
And what's the general market sentiment? I mean, with all this good news, how are the professionals reacting?
Overwhelmingly bullish. You've got 21 out of 24 analysts rating it highly. JP Morgan just upgraded the stock, and they made a key point. The MI300X isn't just replacing old systems. It's capturing new cloud capacity. That's market expansion, not just substitution.
Okay, let's introduce some skepticism here. What's the bear case? What are the biggest risks?
The single biggest risk is the obvious one. The response from the market leader. They could start a price war, maybe undercut the MI300X by 15 or 20% with their next-gen products.
A 15 to 20% discount is huge. How does the company defend against that?
They argue based on total cost of ownership, or TCO. Their chips use less power and have better memory efficiency. So even if the upfront cost is higher, the ongoing energy savings could make it cheaper over the long run.
But TCO can be a tough sell against a huge upfront discount, right? A CIO looking at a quarterly budget might just take the immediate price cut.
That's a fair point, and it's the biggest variable in the bear case. It's why that ecosystem lock-in we talked about is so crucial. Once those contracts are signed, price wars are less effective.
What about manufacturing risk? Could supply chain bottlenecks derail this whole thing?
There's always a risk with these cutting-edge nodes.
Right.
But they've managed it really well so far. They have deals with TSMC, Samsung, and UMC. And in Q1, their wafer allocation actually came in above their own target.
So supply is good for now. Okay. Any other competitive events to watch?
Yeah, you have to watch the estimated Intel Gaudi 3 launch in August. While Intel's share here is still tiny, a big launch will shift the market's focus for a bit. It could create some short-term volatility.
Let's pivot to institutional support. When you see a story like this, you want to know if the smart money is buying in. So who is?
The institutional flow is really encouraging. Whale Wisdom tracked a net accumulation of over 21 million shares in Q1. We're talking Fidelity, Vanguard, BlackRock. They all boosted their stakes significantly.
When the titans are piling in like that, it's a strong signal.
A very strong signal. And it wasn't just them. Insiders bought almost $13 million worth of stock between January and March.
So the people running the company think it's undervalued. That usually shows up on the charts, too. What are the technicals looking like?
The chart's highly bullish. It formed a classic cup and handle pattern that was
Mhm.
confirmed on high volume. And maybe more importantly, we got the golden cross back in February.
Right, the 50-day moving average crossing above the 200-day.
Yeah,
A classic indicator of long-term bullish momentum.
exactly.
So connecting all these dots, the revenue, the balance sheet, the ecosystem, the institutional support, what's the final thesis here for the listener?
I think the final thesis is that they are successfully breaking the incumbent's AI moat. They are winning massive contracts, growing faster, and expanding margins. But here's the critical point.
Okay.
Despite recently outgrowing the industry leader in data center revenue, the stock still trades at a huge discount. We're talking something like a 45% discount on an EV to EBITDA multiple.
45%. That's a massive gap. Why does the market still have that discount on them?
It's that lingering skepticism. It reflects caution about, the long-term stickiness of their software and the execution risk of fending off the competition. But given their current trajectory, that discount suggests a really strong value proposition. They are priced like a challenger, but they're starting to perform like a co-leader.
A really compelling argument for the momentum they're building. Thanks for walking us through all of that.
Anytime.
Make sure you subscribe to Investing Talk podcast to stay informed on the latest market developments. We'll catch you on the next one.